Hi, everybody. Welcome back to Ox Talks. Appreciate you watching the show today. Thanks for liking the videos, sharing the videos, and subscribing to the channel. Let me jump into a recent article from Wolf Street. It was on yesterday. Came out yesterday about the state of the horrible state of the existing home sales in this country right now. And pay attention to this because we are heading in the wrong direction. There is a bottleneck, a gridlock, and with the economic climate right now, I don't see where this thing loosens up without having a massive crash. Again, I'd love to hear your comments below. Please feel free to share and exchange ideas here. The article says sales of existing homes head for the worst year since 1995. The extent to which demand for existing homes has collapsed and remains collapsed is astounding, but ultimately not surprising. It says demand plunged in 2022 when mortgage rates soared, and plunged a lot further in 2023 as mortgage rates continued to rise to almost 8% by October 2023. Do you guys know anybody who bought a home that's carrying an 8% mortgage right now? If you do, or if you're one of those people, please comment below. And I wonder how many of those people put down the minimum amount possible and have the largest mortgage burden based upon the purchase price of their home. I also wonder for those people if the home values have continued to hold their value or if they've gone down in value. But a payment on an 8% mortgage, you're getting about maybe half the house or less that you would have got, let's say, just in 2016 or 2017. Says, but then as mortgage rates dropped starting in November and kept dropping in 2024, demand stayed at these collapsed levels through September, despite mortgage rates having dropped to nearly 6%. And now that mortgage rates have bounced off the September lows, since the rate cut, demand has collapsed further. So what they're saying is demand never really picked up, even as mortgage rates tempered off the 8%. And now they're spiking back up again. Again, if you guys know what the current 30-year fixed rate is, please comment below. But, we have a further collapse in demand for existing homes in this country, as inventories have been rising all year long. So according to this article, inventories have been rising. More people are trying to get out of their homes, and there's no buyers. As everyone knows why. Prices are too high. Prices are too high after the crazy spike can be seen in the charts they have, and people have gone on a buyer's strike. We've been saying that for a long time, and Fannie Mae found in a survey just before the rate cut that lower prices are exactly what buyers are waiting for. Lower prices, lower mortgage rates, and higher wages. In other words, people are still on buyer strike, and they're staying on strike. So guys, comment below again. Lower prices. You might see lower prices sooner than later because you're going to have people are simply going to have to keep dumping the listing price of these properties. The sellers are still staying greedy, okay, and they're not moving their house. There will be buyers at a certain price. It won't probably be at the seller's comfort level, but it is what it is. Lower mortgage rates. We'll see if the Fed keeps cutting rates and how that translates into the 30-year. Some of that's already baked in the cake, I believe, and higher wages, good luck with that. Wages continue to fall in this country. Well, let's just say they're not keeping up with the pace of inflation. In other words, people are still on buyer strike. Oh, I read that, and they're staying on strike. And it was confirmed today, which was yesterday, by the plunge in weekly applications for mortgages to purchase a home, a plunge from already historically low levels, according to data from the Mortgage Bankers Association. Fannie Mae economists in their forecast for the remainder of 2024 said, we expect affordability to remain the primary constraint on housing activity for the foreseeable future. And we now think full year 2024 will produce the fewest existing home sales since 1995. That's almost 30 years. We have to go back to a point where there were that few sales of existing homes in a year period. Sales of existing single-family houses, townhouses, condos, and co-ops have plunged by about 26% from 2018 and 19, and by about 34% from 2021, according to data from the National Association of Realtors. In 2023, it says They fell from 4.09 million homes, the lowest since 1995. In 2024, so far through August, sales are tracking 2.5% below 2024, so even worse. If this decline continues, sales will drop to about 4 million homes. This demand destruction is worse than it was during the depth of the financial crisis, as millions of people lost their jobs and mortgages blew up. And 2024, it says, is the second year in a row, all because prices are too high. High prices destroys demand. Everyone knows that. So here we go. Mortgage rates had dropped to 6.13% just before the rate cut on September 18th. It says the average 30-year fixed mortgage rate jumped to 6.52% in the latest week, according to the Mortgage Bankers Association today, and it says quite a U-turn. But over the past 2 weeks, as mortgage rates have spiked, the refinance mortgage applications index replunged according to the MBA today. So again, we have existing home sales falling further, and we have refinances falling further. People are less inclined to refinance an existing mortgage when the rates are spiking back up. So again, love to hear your comments where you think this is heading. That is the current status, according to Wolf Street, of the existing home sales in this country, and it is not good. And then frankly, you're starting to see this spill over into the new home sales as well, because there's just only so many incentives that these developers and new home sale contractors can offer, right? They can only buy down the rate so much. They can only throw in so many free refrigerators and appliances and tile upgrades and paint upgrades and things of that nature, right? Pool upgrades. So this is not boding well. You again today saw the stock market hit all-time highs. You have the cheerleaders out there saying that we are on a solid footing with employment in this country, and that everything is fine. Again, I think when you hear and read data like this, it makes you really question the narrative. We know there's a lot going on leading into the election the next couple of weeks, and the powers that be need to keep the spin going, right? So we all know that. Appreciate you guys watching. I'll leave it there today at about 7.5 minutes. Have a great rest of your day today. Appreciate you again supporting the channel, subscribing. Talk to all of you soon. Bye.